Hello everyone, welcome to a product review at Phenomenal. Today we are going to look at the CPSE ETF. CPSE ETF is the first largest equity ETF in India. It has about 46,000 crores in AUM. And before even analyzing, one thing is clear is the number of holdings. It seems to be super concentrated, right? With 14 holdings, when you compare this to Nifty 50, which has about 53 holdings, it seems to be, or it is very concentrated. CPSE basically stands for Central Public Sector Enterprises, and the companies in this ETF are basically owned by the government. So government has some stake in all these 14 companies, and that's how this index is constructed. So what makes this ETF so special and how it has performed since its inception? Let's answer all these questions in this video. Now, let's take this fund to Fund Analyzer and analyze how well this fund has performed compared to a benchmark, because benchmark analysis is core of any of our analysis, right? So you start comparing your fund with a benchmark and then you go into the other analysis. So from this analysis, what you can conclude is that you're comparing CPSE ETF with Nifty 50 and a suggested benchmark, and the suggested benchmark in this case is the small cap value index. You can see clearly that when you compare this fund with Nifty 50 or even small cap, right, it has outperformed Nifty 50 in the recent couple of years, or even just recently it outperformed Nifty 50. But the small cap index has consistently outperformed the CPSE ETF, right? And even if you see the excess returns, right, compared to Nifty 50, it has outperformed just recently. It has produced excess returns recently, that is returns more than 0%. But when you compare this to a small cap index, it has brutally underperformed since its inception. There was no excess returns at all, right? And the interesting thing about this fund is that it has just started, as we saw here, recently started outperforming, right? And that's why you're seeing these red color lines. And what this red color lines show you is the abnormal positive performance. So when the price or the price of the fund, when you compare that to a benchmark, when it moves very far away, that is in statistical terms, we call it as standard deviations. When the price of the fund moves 2 standard deviations away from the benchmark, it is considered, or it is what we call as abnormal positive performance. That is, it's deviating way, it's away from the benchmark, right? So it's kind of a cause of a concern that a fund has done really well, like going more than 2 standard deviations away. So it seems to be already at its peak, you can see. Next, we are going to look at some of the characteristics of this 14 companies in this ETF, right? From a valuation perspective, it seems to be on the lower side when you compare the median valuation of the CPSE ETF. So you can see from a price to earnings ratio you see here, it's around 19.5x compared to Nifty 50's 31.3x, right? Because the Nifty 50 itself it consists of like 50 companies, but you're comparing this 53 companies with the ETF, which has only 14 companies, right? And that's what you're seeing here as well, right? From a valuation perspective, everything seems to be on the lower side, right? And from all the 4 valuation perspective, all of them are on the cheaper side, right? Finally, we are going to look at the outperformance and alpha contribution, right? Since 2021, it has outperformed Nifty 50. But during some of the years in between, it has failed to outperform, or even when you're taking alpha, right, the fund manager or this index itself, right, it doesn't produce any significant alpha during 2016 to 2020, right? And when you see the consistency of alpha, it has generated some consistencies till 2018, but in between the alpha was negative or even none. But recently it has again started producing alpha, which seems to be a good thing, right? But alpha seems to be on like an inconsistent basis overall if you see the picture. Now that we understood how this fund has done relative to Nifty 50, as well as we saw how it has done compared to a small cap value index, now let's compare this fund to some of the peers and see how well it has done over the last few years to get a good sense of how this fund has done. Before even analyzing that, let's look at the underlying holdings of these funds to get more sense into what these companies are, right, that this fund is holding. So as you can see here, we are showing you can see the top 10 stocks of this fund out of the 14 stocks, right? And when you scroll down, you can see the top 10 stocks, rightfully so, because you only have 14 stocks, right? You are going to allocate more percentage to the top 10 or top 12 stocks, right? So this consists of 98.8%, so close to 99% of the holdings are in the top 10 stocks, right? And you can see NTPS holds the largest portion of the allocation in this ETF. And when you look at the sector or the sectoral exposures, right, you can see only three sectors here. One is the utilities, and a lot of energy companies are there, and some of them are industrials as well. And when you compare this to Nifty 50, which is diversified across many sectors, right? So if you look at the yellow line, you can see financial companies, you can see healthcare, you can see industrials, you can see tech. Whereas this ETF, the CPSE ETF, is only revolves around these three sectors, right? Which is energy, industrials, and utilities, right? And we already saw the holdings of this fund, right? So NTPC is also the stock. NTPC is also in the Nifty 50, but there's a very high weightage or like overweight in this index, right? Because it carries 20% in this index. Now, this is interesting. So when you compare this concentrated fund, most concentrated equity funds are very risky compared to a diversified fund. So that's what we are showing here, right? When you compare this to Nifty 50, it's probably not twice, but more than 15-20% riskier when it comes to the maximum drawdown, right? So during COVID, right? On March 31st, this fund the Nifty 50 has gone down by 30% compared to 49%. This CPSE ETF has gone down by 49%, right? Which seems to be significant. So one thing this highlights is the riskiness of this fund. So finally, we are going to take some of the peers of this fund and compare this in asset comparator. So in peer reviewer, what it does is that it tries to select some of the peers closest to this ETF and using the factor exposure analysis. So as you can see, this is like a public sectoral ETF, right? And you can also see some of the public sectoral utilities fund because we saw utilities exposure in the sectors chart, right? So there are like a lot of private and PSU banks are here. So we are going to take some of the ETFs from this list and also compare this to Nifty 50 and see how well it has done. And there you go. In the last 2 years, this fund has pretty much outperformed all the major indices in India. Even if you compare this to the PSU, the public sector utility banks, and also the private bank ETFs, it has outperformed all of them. Not since inception because we are just comparing this from 2022. So from 2022, this has outperformed all its peers, even Nifty 50 and the Sensex ETFs. Finally, I think what we have already concluded in the previous analysis is the valuation point of view, right? So that's what you're also seeing here. From a valuation perspective, the CPS ETF is on the lower end, that is cheaper. And also from a market capitalization perspective, it is also on the low market cap side. I think you have understood what this fund is doing, right? So it has 14 holdings, seems to be very concentrated. It is very risky. It is on the lower end of the valuation, that is on the cheaper side, and it has outperformed recently. But when you compare this to a small cap ETF, which it hasn't outperformed, right? So I think that's it for this video. Thanks a lot for watching. See you next time.